Okay, so I believe I fixed the recording issue. So please comment on this video if anyone notices any sort of recording problems or if the video is pausing or skipping. What I'm going to do is I'm going to review the SPY, just the overall week of the SPY, and maybe talk about Apple for a few minutes. So coming into the week, here's Monday. And what I'll go ahead and do, just out of curiosity, I'll probably delete it, but I kind of just want to see it. This is the open of the week, and as you can see, we stayed pretty much around it until we had a big gap up on the weekly chart. So, anyways, let me go to the 8th real quick. Oh, whoops, it was the, let me go back one more day. First, let me fix this. Set that as default. Okay, whoops. Okay, so here's Monday. Here's Monday, so big bar. Big bar, so relatively big risk. And as you can see, anybody that sold to close, sold below it, made 1 times their risk. However, if you're taking this short below bar 1, what you have to be aware of is, again, 50% of the time on the open, you have a reversal. So the reality is, although it's a big bar, probably not going to be the high of the day, maybe 30% chance, maybe 40% chance. But either way, it's certainly a credible short. I mean, just ask yourself, if you're looking at this bar, what would it honestly take for you to, let me try to do it kind of like that more. What would it honestly take for you to sell below that bar? Well, what would it take for you to buy bar 2? You don't know what bar 2 is going to look like. So, imagine, even if you got, maybe if you got this bar right here, it's credible. However, it's probably a surprise strong enough for a second leg. It's a breakout below a trading range, so it could be some sort of, breakout pullback. Maybe we'll get a measured move of this range somewhere down here. Bar 2, strong follow through, but look at the tail. You got a small tail on bar 1, bigger bar in bar 2, and look what you have. Whoops. Sorry about that, there's a little noise. So, not a great looking breakout. This may just be a breakout below Friday's low on the 5th. Bar 3, okay. The bodies appear to be getting smaller. So, not necessarily a great thing for the bulls, or for the bears, excuse me. Okay, I'm standing up now to make it a little easier for me to do this. So, bar 3, smaller body. Even though this is consecutive bear bars, and best bulls will probably get us sideways, and we'll probably have to go sideways before we go up. You have to be opening to a failed breakout, yesterday's low and reversal, plus tight channel. So, this could be some sort of second leg trap. Good bull bar on bar 4. However, following 3 consecutive bear bars, not really a great stop entry buy. However, it's disappointment bar. This is sell to close. Bears will probably be interested in buying back shorts down here. So, not a great stop entry. First look probably minor. Bears will sell this close, scale in, several points higher. Let me see if I can change Yeah, I don't really know how to do it. I'm on the new Windows platform, and it's kind of interesting. But anyways, so starting to form a micro channel for the bulls. Let me just do it like this. It's just easier. Starting to form a micro channel for the bulls. So you have to be thinking possible trading range. Failed breakout below trade that yesterday's low. We're failing. So 50-50 chance we may break up to here. Bears tried to get a low 1 short, low 2 short below this bar, and starting an upside breakout with follow through. So you've got to be open to some sort of maybe like a measured move up there. So consecutive bull bars, possibly always in long. Here, probably always in long, probably at least going to have a second leg up. Not a great second entry short, following a 1, 2, 7 or 8 bar micro channel. Probably going to test the open of the day and probably go above it. However, strong enough sell off, probably going to be a trading range day. The range is already pretty big as it is, so it makes it difficult for, you know, traders to get a measured move. I mean, just look at the overall, you know, or the range right here, if you will, is already, you know, the majority of the prior day's range. So you may not get that much, have that much more of a range. Plus, this rally looks fairly weak. So, you know, bull bar, bad follow through, big bull bar with the tail, small body on the next bar, another big bull bar with the tail. It's consecutive buy climaxes. It looks like a leg in a trading range, probably going to fail up top. Tried to break above the high on this bar right here. Tried again on the next bar. And by the way, I don't know, you know, I hope I'm making myself clear when it's easier for me to often, if I want to say the first bar of the day right here, sometimes it's easier for me to just do that. So I don't know if, you know, I hope this line's easy to tell kind of what I'm pointing to. I just don't really have a good way, because the problem is it gives me this background dragging icon, so I can do this and this. Maybe, yeah, it doesn't change it. TradeStation got rid of the background dragging button, so now you can do this or this, and it used to just be like you had to enable it. So I don't know, I guess they're trying to make it more appealing to everybody. But anyways, so over here, you know, tried to break above today's high, we're failing. Tried to break out again. You're getting a high 1 buy at the top of probably what's going to be a trading range. Not necessarily a great buy. Probably sellers above. Here, second entry short, but fairly tight channel. Strong enough rally will probably get a second leg. So it's an okay short, betting on a double top. You know, what you're hoping for, kind of that home run trade. It's not a bad trade, but you're ultimately hoping for this. A second entry short and a break below the neckline measure move down. But you know, low probability. You have a small risk. You're selling below this bar, stop up here, maybe here. And, you know, small risk, great risk reward. Low probability, great risk reward. So you know, since your risk is small, your probability is low. It's an okay short, and most bulls should definitely exit below this bar. It's a credible short. If you take it, you get a 50% pullback, sharp rally. Probably should just get out. You know, it's always in bulls will exit below this bar, and they'll probably re-enter above here. Strong breakout, break above the range, but however, 3 pushes up on the day. So it's a wedge. However, what we don't know is does this redo the count? Is this a strong enough rally? So this would be the first push, pullback, second push, pullback, third push. We don't know. But in hindsight, right now, it appears to be 1, pullback, 2, pullback, 3. Strong breakout bar, but big tail, couldn't close at a new high. Although it is the high close of the day, you have a tail. Reasonable stop entry short, possible second leg trap, leg 1, pullback, leg 2. Better if you sell below consecutive bear bars and then we get an even bigger bear bar. But look where we are. Two-legged pullback, leg one, pullback, leg two. It doesn't matter that the pullback, in other words, some people call this ABC, A, B, C, where this is the B, but it doesn't matter that we made a new high. So it's in essence, it's a second entry. It's we had a pullback, but for the bulls, rally, and then a second stronger pullback, but you're holding above these lows. This is a pretty, you got to give the bulls credit. The bulls were able to completely reverse this. So obviously this is important. This actually, in a way, you have disappointed bears. So think about it. If I sold this close, how do I manage it? Well, there's several things I could do. On one hand, you could sell this close, stop up here. However, what's your expectation? If we make a new high, are we really going to get a measured move up? Are we really going to do this? Probably not. You're probably not going up here. So if that's the case, it's reasonable to sell this close right here and wait for a stop entry. Do I sell below this bar? Do I sell below this bar right here? No, it's terrible stop entry short. It's a micro channel, terrible looking stop entry short. Context is terrible. Not a great short. Do I sell below here? I could. Realistically though, it's average. I wouldn't. Most traders would probably sell below this bar right here. And if they did, look what happened right there. It could not even get down here. Same thing over here. Tried. So, one thing you also got to ask yourself is, okay, what about this close right here? Well, I, for one, think this was much more reasonable to short than this. So, anyways, that goes into a whole nother kind of topic for another day. However, we'll talk about that another time. So anyways, strong breakout, but big tail, possible 3 pushes down, 1, 2, 3, 50% pullback. Really not a great area to be selling. Although one can sell, and the reality is if you sell this close, stop up here, you'll probably be able to get out of break even. Look what happened. Bears sold the close. We're not able to get out break even. This low was 83. Theoretically, your entry would have been 81, so there's a 2-cent difference. Still, Bears couldn't get out. I still think I think the reality is the Bears are going to be okay. Anybody selling here and selling more higher will make money. And trying again. Well, there's the problem. So now the Bears tried once, they tried twice, strong breakout. Let's see what happens, okay? So 3 pushes up, 1 push, 2 pushes, pull back 3. So at some point, you got to ask yourself, what's happening? Well, what is happening right here? Trading range day, So what did I say over here? Let's go back real quick. I mentioned it's reasonable to sell this close. Although, technically speaking, these traders are trapped. They did not avoid a loss, and they were so disappointed by this rally, they said, screw it, I'll just take a loss. The reality is the trader who sold here, I think more realistic. I don't think a lot. It's okay to take this sell. Don't get me wrong. However, if you're an institution and you're selling down here and price goes above here, why wouldn't you just sell up here? Look where your midpoint is. Sorry, I'm having issues. This new trade station is kind of buggy. So if you sell here, sell more here, your average entry is this low. And right here. So this tells me, I'm going to get rid of some lines. This tells me that a lot of traders sold this close and sold more above here because look what this bar did. As soon as we came close to it, which is basically the close of bar 1, we reversed up sharply. Well, let's revisit down here. I said this. I'm going to say the same thing. If theoretically, let's say I'm a bear, and I sold this close, I sold more up here, and I used to stop all the way, somewhere up here. I'm gonna do the same thing. I'm gonna sell this close, sell more here, and I'm gonna put a stop way, way up here. Well, let's see what happens. This is kind of the problem. And again, I'm not advocating that is the problem you run into. So, understand, I'm not saying one should do this. Do the math. I don't want to really do the math, but the reality is, you're risking a lot. You have to be trying to think kind of how to explain it. I'll put it a couple ways. It's more reasonable to sell here because this is strong enough. You're probably going to get a second leg. Does this warrant a second leg? Well, I don't know. This may be a second leg with this. So, I really don't want to get sidetracked. But the reality is, I think a lot of traders, this is kind of why I'm not a fan of people just selling this close, selling more way, way higher, because it's so easy to just get killed. On one hand, I think it's far, far more easy. Sell this close, not advocating it, but if you did, maybe you get out here and then you look sell again. And maybe you get out here and then maybe you sell here. So, but this is a bad sell. It really is. You're selling a 50% pullback. Here, you're not necessarily selling a 50% pullback. You're selling a breakout. You're selling a breakout below, 81 bars. Here, what are you selling a breakout of? 1 bar? Maybe these. This is the biggest bear bar. These bodies are small. It's not great. So, but however, hypothetically, if I did sell this close, I have a low 1 short, I have a low 2 short, bull body, I have a low 3 short, could not trigger, and then I, maybe here, but at some point I've got to ask myself, okay, this is a very tight, probably micro channel, and at some point you should get out. Nobody's going to sell below this low. Nobody's going to sell below this low. Nobody's going to sell here. Strong breakout, but who's going to sell? Well, it's a very tight channel. How do you make money? Maybe I sell this high, 0.3, scale in higher. I couldn't scale in. I couldn't make money. I did not make money selling here. I'm trapped. I sell here, scale in higher. I don't get out. I get trapped. Therefore, it's deceivingly strong. You got trapped in this area, you made a measure move up. So, anyways, see here. Strong, probably exhaustion, but strong enough for you to get a second leg, which you did. And then you went below these lows. But let me go the next day. I don't want to, I'm taking too long on one day. So similar situation over here. We're breaking below the prior day's lows. However, what happened yesterday? We failed. Well, what's going to happen today? Well, we might fail. And look how big of a gap down this is. It's huge. So think about the range already. The range is really big. We're far away from the moving average. We're probably going to get to the moving average. It's not a great short. It's an okay short. If you take it, what do? Well, you say, maybe 20% chance low today, 30% chance low today. If you sell this close, this is probably not strong enough to reverse this. However, you're saying, darn, it's 3 pushes down, 1, 2, 3. It's a failed breakout of yesterday's low. I'm going to get out of break even. Well, this is always interesting too. So if I sold this close at 26, maybe I went for, how big are these bars first off? So close is 26.06. So maybe I went for 30 cents, let's say. That'd be 96 cents. Well, price went to 99. Price went to 99 and didn't let me out. So maybe I went for 20 cents, which would be 06. Look what happened. Price went to 12. So you can see traders are kind of scrambling to make a scalp. So here, maybe they tried for 30 cents, then they lowered it to 20 cents, failed. Now they finally got a 20-cent scalp. But either way, this is a terrible low one short, probably buyers below. And, if I was short and I saw this, I'd get out. I would just, even if it's a loss, I'd just get out and I would look for a reversal. Although gap down, probably going to be minor and have to form a trading range. But I don't think we're going to get a measure move down. So you got to ask yourself. Here, hypothetically, it's really not, but I think it's okay to think this way at times. Hypothetically, 60% chance you'll get a second leg down, maybe a measure move down. That's not necessarily true, but let's just go with it for the moment. Well, even if you think that, now it's not 60%, maybe it's 50%. So if it's 50%, I really need a 2-to-1 risk reward, which is all the way down here. I'm probably not going to get that. So now I've got a scalp. I've got a problem with that. On the contrary, maybe I've got let's do it like this. What happened right here? Well, maybe I'm saying, gee, I don't know if it's a 60% chance I'll make a 1-to-1, but maybe there's a 70% chance I'll make half my risk. It might be. And that's half your risk. So a trader sold this close, had a stop up here. Half their risk was right here. However, what was their actual risk? Tiny. Which I think is kind of more of what happened. A lot of times, that happens a lot, where you'll get, a move that won't go 1 times the risk, but it might go half the risk. So anyways, I really want to focus more on always in though for these videos. So traders that sold below here, I think they should get out somewhere in here. If they're smart and they understand what's going on, breaking below stays low, they can scalp out. And the reason why they should go ahead and scalp out is because this may happen, and you get a second entry buy, double bottom. It's a reasonable stop entry buy. You buy above it, put your stop below, and look what's happening. Well, this is, it's kind of bothers me. I really don't like it because I like to point at the bars, but I get this little hand thing that makes it hard to see. So anyways, kind of disappointing follow through. Your entry bar, disappointing follow through. So, but again, bears are failing multiple times at a new low. Strong breakout. Well, a breakout above these highs, but again, it's a tight channel. So we're trying to form a bear flag. Bulls are hoping we'll get a bull breakout of the bear flag, but this looks weak. This looks like a leg in a trading range. And if it's a leg in a trading range, the one thing you got to be thinking about is, this is real. We may form a double top, measure move down, maybe 40% chance. The bulls obviously want the opposite. So I want to leave this here, just kind of paint the point. And then look what happened. You get a failed breakout, multiple pushes up. I would get out below this bar. No question. There's just 40% chance you get this. I think it's a small bar. It's a reasonable short. And look what happened. And, this goes back to what I was saying over here. Although, I'm kind of, I think a lot of traders would do this. Although it didn't necessarily work over here. It's the same idea though. Traders will sell this close, and instead of getting stopped out up here, they will sell more above this bar. They sell this close, instead of exiting, they sell more. Look what's happening right there. So anyways, what I would rather someone do is, I think it's better if you're short, take the small loss, or if you're smart, scalp out and go long here. And then you break above the high, you fail, second entry short, you got to get short. If not, sell the close here. And then look what happened. Well, we're forming a double bottom, reversing these bars. Is this, I'd probably get out above this bar. Again, we're forming a double bottom, just like here. Bears try to get a measure move. Here, bulls try to get a measure move up. And so that's kind of the problem. it's really it's another failed breakout of the low of the day. So probability is becoming higher that we get this, and that's what you get. So breakout bars strong, 60% chance you're gonna get a second leg, maybe a measure move up. However, the problem with it is, hopefully, cross my fingers this doesn't change. Okay, yeah, that works. Anyways, we're right here. What do you notice about this chart? The one nice thing about line charts is it kind of keeps you from being blinded of bars. So, this, we're just breaking above lower high. Big gap down. The bulls have a lot of work to do if they're going to reverse this gap. So I'll go back to the candlestick chart. So yeah, probably 60% chance we'll get a second leg, but disappointing. A reminder for the bulls, you're in a trading range. First close above the moving average. Look what happened. Bulls bought this close, disappointed, took profits. I'd get out below this bar. Probably will get a second leg, but again, the risk is always real. Breakout, trading range, another breakout, or breakout, pullback, second leg. It's just, it can happen. Strong breakout, but bad follow through. Bulls, they see, double bottom. You can call it a major trend reversal. It really doesn't matter. It's a pullback, high two buy from this breakout. I think we're always in long. However, it's an okay buy, but that's your problem. If you buy above it, big tail, big bear bars, stops clearly down here. I don't think it's a great buy. Look where you are in the past almost 2 hours. The market's trying to tell you you're in a trading range. Definitely wouldn't buy below that bar. Here, it's a credible stop entry buy. If you do, maybe put your stop below. I'd probably still put it down here though. And then, at this point, I would just get out. If I bought above here and saw this, I would just exit. I really, you're better off getting the breakout, and you might be getting the breakout here, which you are. So breakout, follow through. It's an okay buy, but tail, it's a warning. So clearly always in long, probably going to get a second leg. But the one thing you got to be careful of is that lower highs, breakout, pullback. This might be a 50% pullback, which I already know in hindsight it was, but this is kind of the issue people are always faced with. Strong rally. We're clearly always in long. We have to be always in long. The bears, the bulls are just dominating. It's not true though, because it's so easy to forget about this. Remember the line chart I just showed you. Go back in this video and look at the line chart. Big move down. Consecutive bear bars, 4 consecutive bear bars. The bulls are getting trapped. And, bull flag, bear breakout, small high two buy, another bear breakout. We reversed, the majority of this move. Another move, another bear bar. The bulls just are not, what does this look like on a 15-minute chart? It's a breakout. Stop up here. And we're just channeling all the way down. So, now if I was short, would I get out above this bar? I probably would, although it looks like a leg in a trading range. However, it's fairly tight, so I would rather, I'm not necessarily comfortable buying right there. And that's why. It's tight channel. Lots of gaps, very difficult to make money. And you have to be aware of that. These are traders who are selling, scalping out, selling, scalping out, selling, scalping out. They're selling the bull close, scalping out. They're buying back shorts. And when I say scalping out, I mean buying back shorts. They're buying back shorts 1 point below this bar, 2 points below this bar, or 10 cents below the bar, 20 cents below the bar. Here, low one short, this has to be a buy. It has to go up higher. Well, maybe not. The bears see a low too short. They see a rally, new low, rally, and this is the problem with tight channels. They just potentially keep going down, and then look what happened. Or maybe you're saying it's double top with these lows. Well, okay, so now what do we got? Well, we have a new low of the day and a bad follow through bar. So big bear bar, bad follow through. Probably going to go to this high, but make it a second leg down first. Second entry buy. Well, it's a better setup to buy. Starting to go sideways. We're starting to build buying pressure. Still, I don't think there's any rush to buy. Now we have 3 pushes down, 1, 2, 3. Strong bull bar, close to the moving average. However, I can't get over this. Where are the, let's see right now. What are the bulls going to do in the next bar? There's a strong bar. Okay, maybe you buy it. Strong enough for a second leg. Well, now look what happened. So, although it's pretty much the end of the day, this is the issue, the classic endless pullback type channel issue. It's the same thing with this. Got this at the end of the day on Monday, got this on the end of the day Tuesday. Well, what's the overall characteristic? The overall characteristic is it just rallies and it just grinds its way up. And it's so easy to say, oh, it's a really weak move, it can't possibly. In fact, we had this in Apple. Let me go to Apple. Great example on the prior day. So we had this just relentless sell-off, right? The market's clearly going down. Well, not necessarily. It's a sell vacuum. Sell climax, pause. Sell climax. The bears are exhausted. Well, look at this. Strong rally. Okay, clearly always in long. Well, the market's, what about this strong sell-off? Can I sell up here and, we'll come down to here. Maybe put my stop up here. I'll sell, put my stop up here. Maybe, but what do you notice? Okay, the market's getting weak. It has to be going lower. Bull bar, another bull bar, another bull bar. So the market just, even over here, okay, strong sell-off, it's lower high major trend reversal. We're going to sell off. So the market can just grind its way up. Here, why did we get such a strong rally here? Well, think about what happened here. This is pretty extreme. If I go back to the SPY, tight channel, not as extreme. Looks like a leg in a trading range, but you are getting gaps here and there. Trend line break, new low. It just happens all the time with tight channels. Okay, and then what about on Wednesday? Well, Wednesday, really a mess of a day. Right on the open, sideways bars. Do you buy above this bar or no? Do you sell below this bar? You can, but not really all that great. Second entry short, but forcing you to sell in the middle of a tight trading range. If you did, a lot of traders scalped out. I'd get out above that bar. Too much risk of a high to buy. But not a great buy because the risk is huge. For roughly 40% chance in general. So you need twice your risk, which is way up here. So bear bar, strong enough breakout, probably, this is probably not strong enough to reverse this, probably get a second leg down. And, we just ended up getting a bull bar and then rallied up for several bars, trying to form a double top over here. So, bulls will probably get out below this bar. Bears can sell, but again, it's really not that great, We had a rally, high 1, pullback high 2, so high 2 buy, but bad stop entry, tight trading range. It may fail, and we may try to get a double top bear breakout. We tried to get the bear breakout, ended up forming just a wedge. 1, 2, 3, second entry buy, and of course, rallied more here. Maybe this was the Fed. I can't remember. This is a credible stop entry buy. It's a breakout at a new high of the day, sharp reversal down. It's a reasonable stop entry short. But, look what's happened the entire day. we had a strong entry bar, very disappointing follow-through bar. And when you get this situation, very often, it happens a lot where traders will buy above this bar, buy more lower, and get out at their first entry over here. And relentless buying into the close. So, not really an easy day for most people. It's trading range day, limit order market. But that's for another video. So what about Thursday on the 11th? Well, consecutive bear bars on the open. But big tail, another big tail. So not really a great bar. Is it clearly always in short? I don't know, maybe. But, if you do sell, do you get out above this bar? Maybe. Do you get out above here? Maybe. Do you get out above here? Well, maybe. But tight trading range, not really a good area to be selling. Then we get really just a mess. And then it didn't become clearly always in short till, maybe here or here. Well, I don't think we ever went always in long. It was not high probability selling until here, in which we got big bar, huge tail. So probably going to have to go, this will probably become a trading range. It's not, I think it'll reverse, but it may take 20 bars. Trend line break, second entry buy, but probably a minor reversal. Then we got more of a trading range, new low of the day, new low of this range. And again, just tight trading range forming, failed breakouts below lows. Okay, so tight channel, first low's probably going to fail. Nothing really to do yet. Again, same thing with the other day that I was showing. Tight channel, trend line break, but what's going to happen? We're trying to break above the moving average and we're failing. Strong, that's a decent stop entry. Closing near its high, we've gone sideways for several bars. It's a reasonable buy. But, that was the end of the day. And then yesterday, Friday, we had a big gap down. A big gap up. So, bar one, do you really want to buy this far above the moving average? Probably not, but better to wait for something credible. I still wouldn't buy above bar two, even though it's okay to buy above bar two. Then you get bad follow through, you get a high one buy, but we're so far, there's like a 99% chance you're going to reach the moving average at some point. So, I don't want to buy, I don't want to buy 80 cents above the moving average on the open. Strong outside down bar, probably going lower. It's probably an okay sell, or you can, wait, maybe you sell above this bar, or you sell this close. But trading range price action, consecutive bear bars, and we got 3 pushes down. So I would get out of shorts above this bar right here. If not, I'd get out over here and consider going long. Strong rally, probably minor reversal, okay to get out of shorts there, but I wouldn't necessarily sell. It's credible major trend reversal, but I just don't think it's that great. And for that reason, we formed a double bottom. And the bulls want a double bottom and a measured move up. And, tight channel. Here, maybe it's kind of a double top, lower high major trend reversal. Bears will sell it. Bears had better bull bars. Bears had better bear trend bars here. But again, breaking below a new low. Could be a wedge or a triangle. 1, 2, 3. Not really a great area to be selling. If I was a bear, I'd get out above this bar. And, we're rallying. And it's basically into the close. And we rallied into the close. So, not really anything extraordinary. Let me look at a few things. Facebook, big bar, big risk. And, I wouldn't, if you buy it, probably, I don't know. Maybe you could out below that bar. You don't really have to. But again, it's not great. Maybe you buy this close. But anyways, tight trading range on the open. Probably not going to go much higher. Probably going to find sellers. Okay, I hope this video helped. Comment below if you have any questions. Thanks.